So on April 1st, this was my prediction of what was next with the market. What has happened since then? Have we hit the bottom? Well, let's start out with a comparison. This is what my prediction was, where the market was going to go down, dip up a little bit, dip down a little bit, and then a little bit of volatility, but steady rise. Here we are, a couple weeks later, April 17th, and boom. So just as predicted, it went all the way down, sort of got really low, bounced back up, and then dropped again, and then started rising up. Main difference here is it's actually rising more aggressively than I'd anticipated. It's still too soon to see how this rise is going to play out. You know, are we going to see it sort of test these lows again or not? But generally speaking, this is kind of what I had expected. So what does this mean for the old portfolio? Let's take a look. Let's log in. All right, let's pull up the portfolio. Here we can see I started this portfolio on February 27th. Took a quick rise right away and stayed positive. Then it dropped down, then it rose, then it dipped, then it rose, and just been going up and up and up and up. And then, like a rocket, just flew right up. So we are looking pretty good. You can look at the percentages here. A lot of green. You call this 12% return. So that's about a 16% return. So this is where we're at. So the next question is going to be, what comes next? And have we passed through the bottom? Have we hit the bottom? So I'm gonna go ahead and say that I believe we have hit the bottom. So where do we go from here? So I've been really good with the predictions of what's going to happen, but at this point, I don't think I can make anything too solid. We're through the major crash, and I believe the recovery has begun. So, sweet quarantine. Hit the like button. Haha! The way I'm going to look at this is I'm going to divide this into two different phases. And I'm just going to give you sort of a broad idea of what I'm expecting. No one can see the future, right? So this could be wrong, of course. But I've been right so far. Let's see if I can continue my winning trend. So phase 1, volatility. Phase 2, long-term growth. So phase 1 is volatility with a upward trend. So what that means is, you see how it's looking really good right now? Something can happen where it can drop back down to maybe test these lows over here. That's something that I wouldn't be surprised if that happened. Maybe it's not as drastic, maybe it only drops to here. But right now, you know, they say buy low, sell high, right? So if you wanted to make a lot of money, you could have made a really aggressive move and bought a lot of shares here. I would be looking to sell right now. As far as short-term gains, you put a lot of money in, there's a lot of risk there, right? So you don't want to hold your positions too long. This is a good return on your money. I mean, let's say you bought 1 million shares of something here and you sold here. You did pretty good for yourself. But if you're looking at a long-term investment, right now, I think the price is kind of, phase 1, we're talking short-term. So right now, the price is kind of high for short-term. Meaning, if you buy now, 263, it could drop to 250, and it could take a while to get back to 263, so you could be in the red for a while. Or it could drop down here to 251 or something like that. So if you're buying now, be prepared for the potential of, in the immediate, being in the red. Hopefully not for too long. And definitely in the long term, you're going to be on the upside. But right now, you're out of... See, ideally, you want to buy in this sweet spot. If you're buying in this zone like I did, I started buying about here. Right, I saw this big crash. I was like, yeah, time to get in. Actually, before that even. Let's see, let's back out. So the market was doing well, rising, 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 rising. And then I saw this and I started, oh man, now's the time to jump in, right? So I opened up an account and funded it right about here. Actually, no, I'm sorry. I opened up the account. Actually, I'm sorry. I did fund it about here. And then as it started falling lower and lower and lower, I bought more around here. I think my low target was around this point. So I got pretty close to the actual bottom. My worst case scenario, we didn't quite hit, was just below this. I think about 180. So I was predicting worst case scenario we would get about 180, not much lower. We got to about 205, 204, 205. So I was about $20 away from the bottom, which is pretty darn close for a stock that started at 310. So 310, and I predicted it would go down to 180, worst case scenario, or more likely around 240, 250. So bottom line is, if you're looking to take advantage of the discounts, I would be looking to buy. But just know you kind of missed the boat a little bit on this. So your portfolio may not look good in the immediate. So let's say it takes you a couple months, 2 to 3 months to get in the green and stay in the green. And again, it's going to fluctuate, right? So you might be in the green now, and then you're in the red, and you're in the green. So I'm saying it might take you maybe 2 months or so. Could be much sooner than that before you're just straight green. And that's the sweet spot. I love that. I'm in that sweet spot right now where I have so many gains right now that the market can do all kind of crazy stuff. You're going to see bad days. The market tumbled 800 points, 1,000 points, or whatever it is. And it's not going to affect me. I'm going to still be green. I'm going to be able to be taking, the market drop significantly, and yet my portfolio still be positive because of the fact that I bought so low, right? So if you're buying now, in 2 to 3 months, you'll be in a similar position to where it's just all uphill from there. But if you're looking to make a long-term investment like I am, you're looking to make I'll be looking at a 1 to 2 year window, as long as 4 years. I mean, the market looks very, very aggressive, so who knows? But I'm still going to be pessimistic because we're dealing with unprecedented times right now with what's happening, and the real full damage, the collateral damage of this coronavirus thing is not yet realized, because and it's hard to predict because this is unprecedented, right? So we're gonna see stuff that maybe you didn't think about, and cascading effects. This event happens, which leads to something else, which leads to something else, and then whoa, look at this thing, major bankruptcy. Oh my goodness, this entire industry is shut down, or you know what I mean? So unemployment, insanity, so many things that we have yet to find out about. One thing to consider, because some of you may be wondering why the market is doing well right now and we have major unemployment numbers and all that kind of stuff. This was expected, right? The thing with the stock market, I always tell you guys, is you've got to be ahead of the curve, right? You don't want to be following the crowd, all right? You want to be the one ahead of the curve. You want to be looking into the future, which is what I did. That's why my portfolio is looking really good right now, because I didn't wait until, oh my goodness, the market's recovering. No, it's going up, right? I didn't wait for that, right? I jumped in early. I'm buying as it's going down, buying more aggressively as it gets lower. Ideally, I was going to buy even more here, but I missed that point. And then I'm going to start buying the most once I see about, the original plan was I was going to wait till 2 to 3 months of upside, and then I would go all in on my 4-year move. So that's where I would be buying the most. So now is definitely the time to buy, but think long term for sure, because you might get some pain in the short term. But 2 to 3 years, 4 years, you're going to look real good. So that's it. Phase 1, volatility with a general growth. So things moving towards the upside with bad days, good days. There are going to probably still be some days where, oh my goodness, 800 points. It dropped by 800 points, But overall, this is the trend. Like you see this, it went up. This is great. Look at this. Growing. And then bad day. Growing. Bad day. Bad. Wow, look at that. Now we're in this little dip. Oh, no, it's coming back again. This is the kind of stuff that I'm going to be thinking about right now. So what this means is, depending on your timing, so let's say, it's going up. Oh my goodness, I got to jump in. And then you buy here. And as soon as you buy, it drops. And it comes back, but it comes back to where you bought it. So you haven't moved anywhere, right? And then it starts falling. Oh my goodness. So look at this. You bought here, and it took you all this time in the red before you sort of got back to where you started from. And it started moving on the upside. That's the kind of annoying stuff that's going to be happening now. But if you buy now and you relax, just let your money sit, marinate, 2 months from now, 3 months from now, 6 months from now, I think you'll be very happy. 4 years from now, you are going to be looking real nice. Now, how we're going to get back to where we left off, I was thinking that's going to take some time, and I'm unsure about that at this point. Look at how we're rising actually almost as aggressively as we fell. But remember when I talked about the storm, right? So the storm, you got the edge of the storm, and then you got the eye of the storm. The edge of the storm is where you get the most volatility. So I'm talking about like a hurricane, right? You got a lot of volatility. You got high winds, markets all over the place. It's up, it's down, it's falling so aggressively, right? The recovery, initially, you're going to see that kind of thing as well. But then the next thing is the eye of the storm. That's where things calm down. So I'm going to think that we're going to get back to more a growth rate like this. Right? So aggressively it's growing like that. I'm thinking it's going to get to this type of thing. How long it's going to take to get to that slower growth, I don't know. Let's say it keeps rising up to like 275 or something. And then at that point, it's just kind of like, we're getting more bad news, bankruptcies, blah, blah, blah. All the people, remember you want to be ahead of the curve. All the people that are anticipating this return and want to get these discounts, they're trading heavily now. Right? You see how high the volumes are, right? Trading heavily now. And actually look at how the volumes are dropping off a little bit. A lot of the activity is here. People looking at indications like, oh, I gotta get those discounts. All right, look at that. They jumped in there, but I actually waited until it fell even more. Volume dropped off, and then it started picking up, and this is the wave. This is where I jumped in. So I jumped in with a lot of people as well, but I'm thinking ahead, right? So other people waited until later and later. And perhaps they waited a little bit too late. As you can see, the volume again is falling lower and lower over time. So think about that volume dropping, because again, this is all the action. People are discounts. I want to get cheap. Blah, blah, blah. So the people who had those plans have been watching it and making their moves. Most of them already made their moves. So the volume to me is going to start dropping off more and more. And then you're going to have more sideline people. They're uncertain. They're sort of making long-term moves and things like that. So I'm thinking that this is gonna sort of level off a little bit. I don't think we're gonna see a return as aggressive as the fall. I mean, you're talking about, if that were to happen, 219. That's when this started. 1 month of just bleeding, right? So that's 319 right here. And then we're approaching 419. So that'll be 3 months total. So it took us from 219 to, you almost call it 319. You almost call it exactly a month. So 30 days for the market to fall this low. So if it rises as aggressively as it fell, then you're talking about a 323, 423. So you're talking about next week, Thursday, the market is all the way back up to 310. I don't think that's going to happen. I'm on the fence, though. I'm on the fence about the fact that it's rising more aggressively than I thought. I mean, ultimately, it doesn't really matter. I mean, the only relevance is I don't want to wait too late to start loading up my positions really aggressively. I mean, to be honest, I shouldn't be waiting. I try not to use emotion when I'm trading, but I am human. And I know if I buy too much right now, I'm going to take hits because of the initial volatility. And I like the way my portfolio looks. I'm going to be honest. I like the way it looks like rising up like that. And even though I know any short-term losses will be irrelevant because it's a 4-year move, I still don't want to mess with it. But I will admit that that's highly illogical and absolutely ridiculous. I should be buying heavy now. I really should have bought when I saw 204. And then when I saw it starting to rise like this, I should have already looked to buy even more. I think every 2 weeks I'm going to load up. And in terms of what's next for me, I'm gonna keep buying the dips. I'm gonna anticipate a short-term bottom, and I'm gonna set my limits. Hope I get executed, and if I do, great. And have it bounce back up, the dip. And I shouldn't say wait for another dip. Anticipate another dip because I need to be ahead of the curve, right? So if it's up to 265. I gotta anticipate that it's gonna dip back to 263, right? So then I put in a limit order to 263, so it's 265, 266. Some bad news happens, starts falling. 265, 264, 263 hits my limit, gets executed, and then maybe it goes 262, 261, and then a few days later it starts to recover. And it crosses my limit price, goes higher. So the effect is, as we pull out of this, I'm loading up my positions. So ultimately, the value of my investments get greater and greater. So $10,000, $20,000, $30,000. Once it gets to a really good size, I mean, I like $100,000 and up, $100,000 and up invested. I think the returns look. But regardless of how high I take things, by me accumulating a sizable position, my returns can get substantial. So if I have $100,000 invested, if I get a 10% return on a $100,000 investment, we're looking at $110,000. If I hold my position so long that I get a 50% return, that $100,000 becomes $150,000. Alright guys, it's been a long week. I'm really tired. That's my plans for now. Additionally, I might start doing some research looking for some opportunities beyond the index. Index is easy for me. It's sort of automatic trading. I'm just tethering myself to the market, so I don't have to get too involved in specific companies and how they're doing and their decision making in their product and changing markets and all that kind of mumbo jumbo. But I want to take advantage of other types of discounts. So I want to look at some companies that are struggling, but have a lot of great past. They've done well in the past. They've done really well in terms of market dominance and things like that. They're healthy companies. They're right now that they're dealing with a temporary situation. Their prices are really cheap. I want to jump on something like that and get even greater returns, because right now what am I, 16% return? I mean, that's not nothing to sneeze at. But there's many opportunities out there where you could be getting a 20, 30, or 40% return, or even greater than that if you pick something well. Because this is generally how the market went down, but some companies get hit harder than others. So you pick a company that really, their stock really took a dip even more aggressively than this, and you ride their return, that could be a nice, sweet investment. So I'm going to look for stuff like that. I'm also looking at Asian markets as well. There are unique issues going on over there. So we'll see what happens. Anyway, let me know what you guys are doing with your own investment plans. If you enjoyed this video, click on the like button, subscribe, smash the bell. And have a great weekend at home. Quarantine. Sweet quarantine. Ooh, ooh, ooh. We are quarantining. Sweet quarantine.